So I want to talk about three REITs that I would never consider selling. I could buy and hold these forever, into retirement. And the reason I say that is because these REITs are, first of all, they're very good dividend payers, okay? Now, two of these actually pay on a monthly basis. So all of these REITs that we're talking about have solid yields. Now, if you're unfamiliar with REITs, what they are real estate investment trusts. So that's what we're talking about in this video. Now, real estate investment trusts are basically, in my opinion, one of the easiest ways, if not the easiest way, to get invested into real estate. And all you have to do is open up a brokerage account. You can go to Fidelity or Schwab. I have Fidelity personally. And you can open up a Roth IRA. You can also open up an individual brokerage account. Talk to a financial advisor if you need to, but you can also just call them on the phone. They have licensed brokers you can talk to, and you can ask about all the different accounts they have and stuff like that. So that's basically how you can get started investing in real estate investment trusts, such as the first one here, which we're going to talk about, and that is Stag Industrial. Now, Stag Industrial, I've talked about this one on the channel a lot. Now, this is a monthly dividend payer, so we're going to be getting those monthly distributions. Now, it is down 5% over the last year, okay? And you might look at that versus the overall market and try to compare it. Granted, it's up 66% in the last 5 years. So we are, seeing an uptrend in the share price long term. I think we're moving in the right direction. But if we look at the dividends that Stag Industrial has paid out to shareholders, they've been very, very consistent. Now, one thing I would like to see more of, and we'll get into all the fundamentals about this company. I just want to show you what they're paying out in terms of dividends, so actually what you're going to get paid if you invest in this real estate investment trust. So they pay 4%, 4.16%, annual dividend of nearly $1.50 per share. And as you can see, they have these dividends that are being paid out every single month, January back to December, November, October, September, and so on. So very consistent. Now, one thing I would like to see a little bit more of is basically a larger dividend increase, because as you can see over the last several years, they have in fact been raising their dividend, which is good, from 12 cents to a little bit over 12 cents, and they've been kind of just inching it up year over year. If you made a chart, you could kind of see, a curve that would be very gradual in nature, but you would see a gradual progression in the dividend, which is good. That's what you want, right? So they've been increasing that dividend for several years. I would like to see a larger jump, especially with inflation and everything going on. I think that would serve them well as a company, to shareholders especially. People would get excited about something like that if they were to substantially increase that dividend to 13 or 14 cents. But you also have to look at, their operating income. And keep in mind with real estate investment trust, they actually already pay out 90+% by law to their shareholders, right? So you as an investor into a real estate investment trust, you're already getting 90+%. So this yield of 4%, maybe they don't really have much room to work with in terms of how much they're paying out, this 12-cent per month dividend. But you can kind of run the math on, if you invested $10,000, how much would you get back per year? You'd get back over $400. So that gives you an idea. If you had $100,000 invested into Stag Industrial, you'd be looking at over $4,000 a year coming back into your account. And $4,000, especially these days in retirement, I totally get is not a lot of money. But if you're able to stack up over the years, especially with inflation, it's going to be a lot easier to do this kind of stuff, to stack up a $500,000 portfolio, $1 million portfolio long term, through the power of compounding, through the power of reinvested dividends. These things are possible. And so when we get into Stag Industrial and the fundamentals, keep in mind, from an investment perspective, speaking of compounding and how this company has grown, they are a real estate investment trust focused on the acquisition, ownership, and operation of industrial properties throughout the United States. Now, one thing to note about Stag is that they also, keep in mind with Stag Industrial, they are essentially focused on e-commerce, okay? That's the first thing. So when we're thinking about Amazon and all these different tenants, I think Amazon is still one of their major tenants, actually, where Amazon actually pays Stag Industrial, who is the landlord, for a lot of their e-commerce facilities, their fulfillment centers, their sort centers, all of that kind of stuff. And I actually work for Amazon, which is interesting, and I know that the building we have is leased. I don't know if it is leased, through Stag Industrial. That would be interesting. But they do have a landlord on our building. So Amazon uses companies like Stag Industrial, and then they become tenants of Stag, right? So that's, if you think about the long-term growth of e-commerce, that's one of the reasons I like this company. They have all of these, 116 million square feet in 41 states, 591 buildings. Here's the ticker symbol if you want to purchase it. Once you open your Fidelity or your Schwab account, you type in Stag Industrial, STAG. But you can see the enterprise value of $9.5 billion. And you can really just go over onto their website and check out all of their different acquisitions, their assets, properties, everything, right? If you click on properties, for example, it'll pull up all things about Stag Industrial and what they're investing in. So just remember, Stag Industrial is focused on e-commerce, right? They're focused on basically this growth track record that we've seen with industrial real estate, because warehouses and fulfillment centers and all of this stuff, I think, is just going to keep on expanding. Robotics, think about robotics and AI. How many facilities will Stag Industrial need to invest in terms of industrial real estate, or in terms of any type of fulfillment for future products, right, and things that we're going into in the future. So I really like Stag Industrial. That's the first REIT. Now here's a chart of Stag Industrial, as you can see over the last several months, real quick. But we'll get into the next REIT here, which is going to be Realty Income. Now, Realty Income is one of those stocks that's been around for a long time, several decades, in fact. If you go back to the 90s, I think they IPO'd in the 90s. And if you go back to the all-time return, 94. So before I was born, actually. I was born in 95. But if you look at this company, Realty Income, 577% share price return. That's not including dividends. Okay, so let's look at the dividends. Now, this company is known as a dividend aristocrat. What that means is they have been increasing their dividend every single year for several decades. In fact, it's 25 plus years they've been increasing that dividend. And so if you look at the dividend, you'll notice gradual progression, which is paid out on a monthly basis, by the way, because Realty Income, they pride themselves as the monthly dividend company. They love to talk about and bring up the fact that they have been paying these monthly dividends for basically since inception, right? That's what they pride themselves on. And they love paying out these monthly dividends to shareholders. And as you can see, these dividends just keep going up and up and up. And if you did a graph, this would be a bit of a steeper curve on that graph, on that chart, where you would see a direct correlation between Realty Income as time progresses and those dividends going up over time. And so you could really plot this out. Maybe I should do that in one of my videos to show you the curve and show you how it's looking, because Realty Income has done a fantastic job at paying out these dividends, and they continue to do so. And so that's why I like Realty Income. Now, coming over to, as you can see, the monthly dividend company, unconstrained by property type, industry, or geography. And so the thing about Realty Income, just remember that they are all focused on, diversity and making sure that they are a partner to thousands of properties. They have retail, industrial, commercial sectors. They're basically trying to reduce exposure to a single tenant or location. So that diversification is going to be huge for Realty Income when you're looking at long term, especially with disruption of technology. Certain types of real estate may not be the best anymore. We've seen this push for remote work. We've seen this push against remote work and vice versa. The employer versus the employee. And we've seen how office space may not be as valuable in the future. Now, office space may be still a huge investment. Maybe they're going to transform a lot of office space into homes and stuff. I've heard people actually talking about doing this, and some companies are taking action to do that. But when you think about certain types of real estate, just remember Realty Income is broadly diversified, okay, as you can see, geographically diversified and growing internationally. As you can see, it even has Taco Bell on there as a tenant. So it has, I think I saw McDonald's on there too. So you can look at all their tenants, right? But I mentioned the strong dividend growth, and then also if you look at the management and how the management has really done a great job overall with the company. You can go back in history and look at how they've managed the company and what they've done. Now, if you look at their portfolio, you look at the portfolio diversification overview, right? With top 10 industries, you have convenience stores, grocery stores, dollar stores, home improvement, restaurants. I bet Home Depot's on there, by the way. Restaurants, quick service, drugstores, maybe Walgreens, right? automotive services, health and fitness, restaurants, casual dining, and gaming. Now, I think Walmart actually is one of their tenants, if I'm not mistaken. And if you think about a company like Walmart, remember, they've been closing locations. But is Home Depot going to be closing locations, right? Or are they going to be expanding? You know, Home Depot, from my understanding, has been doing well over the last 5 years. So when you think about different tenants, right, that's where this diversification comes in. You know, there it is, Walgreens. You have CVS Pharmacy, Home Depot, there it is, 1.1%. But you also see that some of these tenants have a stronger weighting in the portfolio. I mean, is 7-Eleven going anywhere? I don't know. I mean, 7-Eleven's been around for decades, right? 7-Eleven is everywhere. I was in Orlando recently, and 7-Eleven was right there near Walt Disney World. And I think that 7-Eleven's been around for a super long time. And so these 7-Elevens pop up, and they end up staying. There's, one out in St. Louis where I live. And so that's just an example. Wynn Resorts, Lifetime Fitness, FedEx. Is FedEx going anywhere? I don't know. You have Amazon as a competitor, but then that gets back to Stag Industrial. Amazon is Stag's tenant, right? So it's all about who owns the property, who's benefiting, who's getting paid. In this case, Realty Income is getting a lot of money from these tenants. And you have the top 20 clients. Top 7 regions, it shows you where they're primarily investing in. Florida is a big one, 5.4%. But it goes over all of the diversification, which I love. So that's the thing to keep in mind with Realty Income. You can see all their tenants, you can see what they're investing in, but they have hundreds and hundreds of, thousands, sorry, not hundreds, thousands of properties. It's 15,600 commercial properties that are leased to over 1,500 different clients who operate in over 89 separate industries throughout all 50 U.S. states. Now, I think we already went over the dividend here, but just a reminder, 5.68%. Stag Industrial is paying about 4%, so 5.68 versus 4%, you get a little bit more of an initial yield with Realty Income. Not that that's the most important thing, but anyway, $3.20 annual dividend on Realty. And then here is the charge for Realty Income over the last several months, just to show you where we've been trending. And we have been up the last few months here since the beginning of the year. Now, the next stock I want to talk about, and the final stock, is Digital Realty Trust. This is another solid one, okay? Now, Digital Realty Trust, if we're looking at data centers, if we're looking at AI, we're looking at the infrastructure for cloud computing and all this stuff you hear, all the terms you hear in the news, all the stuff you hear about how we're moving in this direction. We need data centers, right? We need storage. We need all this kind of stuff. So basically, Digital Realty Trust is focused on providing this essential infrastructure. They are focused on providing from business to consumer, basically the demand for data storage and processing capabilities, right? So Digital Realty's properties are focused on the global economy. They do have a global footprint. They've been paying consistent dividends. Now, this one is not paying on a monthly basis, but they have been paying on a consistent basis. And so when we're looking at where this market's headed, when we think about the need for this, the demand for this, in my mind, it's pretty obvious with storage or data centers and all this stuff, all the computing and everything that they need, all the investment in AI, I feel like this is going to be a good one. And if we look at the track record of the share price, you'll see it's up 4% in the last 5 years, not much. But look at this, right? So since 2004 inception, we're up over 1,000% on our share price, which tells me they are probably moving in the right direction. I think, what we're looking at here over the next 10 or 20 years is an acceleration of these trends where AI and all this kind of stuff is taking over, right? So this is going to be beneficial for a company like Digital Realty Trust. And if we look at what they've been paying out in dividends, you can see that the yield is a little bit lower on this one, and the initial yield, 3.43%. You're getting a 4.88 annual dividend, almost $5 per share. Look at the track record of these dividends, though. They have been increasing every single year, 2019, 2020, maybe not every year. It looks like they've been kind of stagnant the last few years here. And maybe that's a move to be more conservative, right? Maybe they're thinking, yeah, we've been increasing the dividend, but maybe we should hold off until we can get some further growth, until we can grow our assets, until we can grow our storage capacity, whatever it is that they need to be able to help out their clients, help out their customers, right? So as you can see, since 2022, the dividend has been consistent at $1.22 per share. Meanwhile, the share price has been going up, so that yield has gone down. Actually, in the last few months, it's been going down. But the point is, the longer-term trend for Digital Realty Trust is up, as you can see. And so I think this is a really solid one. I really do. I think this one over the next 5 or 10 years, this one could see exponential growth. And so keep an eye on Digital Realty Trust just from that perspective. Now, if we come on over to, as you can see, by the way, they pay on a monthly basis. Every 3 months, you're going to get those dividends, and they're very consistent. So $1.22 per share every single quarter. And as you can see, coming over to their website, it just shows you, what kind of an overview of the company and then an investment highlights. Why should you invest in this company? Well, they're a leading global data center platform. And so we just kind of talked about that, how this is going to be, digital transformation driving robust data center demand, strong secular tailwinds. That's a big one. Just the fact that we're going into this digital era more and more, and it's just going to be one of those things that's really important long term. It also says they have an investment grade balance sheet over here, a proven management team, and a durable competitive advantage, global footprint serving full customer spectrum from enterprise to hyperscale. And they have an investor presentation. You can just kind of go over their website here. I'm going to leave all these websites below because I want to basically, give you more information on these companies so you can do research yourself. And I always encourage you to do research yourself, because even though I like these companies, maybe these companies are not for you. Maybe you should not be investing in these companies. Maybe, you should consider other types of companies for your portfolio. And maybe it's totally outside of your risk tolerance and investing goals. Maybe you should be considering something else. But these are the 3 companies that, the 3 real estate investment trusts that if I could, I would buy and hold them forever. I think these are great real estate investment trusts. And I think that if we're looking at where these companies can go, where they can go in the future, these REITs, what the trends are for not only industrial real estate, the broad diversification of realty income and the hit tracker record they have, and also Digital Realty, right? Going over their website, learning more about them, learning more about the future and where they're going. I think all 3 of these have, one of those things where all these stocks have potential, all these REITs have potential. And as you can see here, this is from, it looks like, CEO of Digital Realty, global data center platform enables us to deliver value and security on 6 continents and 25 countries and 50+ metro areas. So they are where their customers need them. So I encourage you to check this out. I encourage you to head on over to their website here. And with that being said, hope you guys enjoyed this video on these 3 real estate investment trusts to buy and hold forever. And stick around for more content like this. If you did like this content, consider hitting that subscribe button and that thumbs up button as well to help out the channel. And we will see you in the next video. Take care.